Okay, you guys, it is September 22nd, and we are in forward focus. So this week, we were looking at things being more of a choppy week as we were heading into this week, and, haven't really disappointed as long as you were expecting the chop. So take a look at what's happened here over the course of the week. We've just been going back and forth. Hasn't really been a main trend for the week itself, unless you consider the sideways trend. So, this is what we're looking at intraday here. And the play that I'm currently in is just the double bottom, you guys. So I went long this yesterday. It was yesterday morning. I'm not sure exact time. Let me go look. I just kind of built into position. Yeah, I mean, so shortly after the open, and then I kind of added in a little bit later, around like 11, or sorry, 10:50, 10:45 or so. So I'll go to smaller time frame, do check charts. So what you can see here is that we had that double bottom there, but with that double bottom, we also had that momentum shift. So it wasn't that it was just coming into a retest of the lows. It was that it was coming into a retest of the lows with that shift that was happening. So what I was expecting is, there's a couple of ways that that could play out. The most likely, I figured, because of our daily time frames still kind of being more on the bearish side, we pulled into support here, right? But it had a really strong drop there. So there's still potential that this can creep a little bit lower here on the daily time frame. So what I was looking at was with this double bottom. If we look at this on the daily time frame, see this correction over here? And then here's where the double bottom is starting. So a lot of times, even if it can't get a bounce going there that's really strong, you'll still get kind of a trading range type of thing going on coming off of that lows. So I wasn't really sure exactly how well it was going to react off of that. I figured, it might just go into a range for a few days, but it's probably going to try to get up at least to the upper end of that range. So what I ended up doing with this is that in yesterday's session, we had this coming up, and I talked about this in League of Traders yesterday. It was coming up really steep move up here, and some of you guys were looking for like 2T action. I'm like, no, not there yet. Our king and our queen are just too strong at that point. See how fast it is on the upside on this 20,000 tick? But then we widened up and we got a megaphone, and that led to a nice little two-way pullback there towards the end of the day. And we've also been looking a lot at momentum shifts on intraday charts this week. And so we saw a really beautiful momentum shift on that as we were going into the end of the day. That was basically exactly textbook, like the first thing we talked about Monday morning. And so this shift there got me out of a big chunk of the position, but I was also considering the fact that, hey, we still have room for that to try to go up into the bigger part of that channel. So that created our Phoenix here. And I saw a few of you guys caught that as well this morning. So we're basically just continuing that. That added me automatically back into it. So I was just kind of monitoring channel breaks and just putting in order, just kind of shifting. So as soon as the channel broke, it got me back in. But it wasn't something where I've been here actively trading today, dealing with migraine and just not feeling well. So it's just been more of a management mode of that bigger position. So I do think we still have room here on the upside. We're seeing, some shorter time frame corrections. You've got a really steep momentum reversal plus type of pattern here that kind of led to this correction, but this also makes it a two-wave correction because the momentum reversal plus here is still very, very strong upside. So what we're seeing again is kind of the same pattern again, you know, a little 2B here on even smaller time frames, right in here. You can see how this looks really close to what that double bottom looked like, even though, you know, it's not a previous bottom, it's channel support. You know, it had the stronger downside move and then the shift. And then this is another buy setup in here again. So what I'm looking at here is, you know, just kind of managing this as it's pulling up. And every time we start to see a reversal pattern, just taking some off and kind of going back and forth. I mean, the thing is we're basically playing out into more of a range here. If you look at this is what I'm looking at here. So I'm looking at these lows here, and then I'm just kind of projecting up. So as long as momentum remains fast as it is over here, it's easier for it to get to that upper channel, which is right there. But if the momentum starts to shift, like let's say this pulls back into here, you guys, and then it pulls up. Well, then I want to get more aggressive on management because then the odds are more that this could go and do a two-wave correction then at that point and break down faster. So I was looking at this being kind of like the worst case scenario for that double bottom is if it just kind of, you know, hugged along here and broke back down. So the potential was there that it could just be a creeper and lots of overlap back and forth. But so far, you know, the Phoenix is playing out pretty well. Um, Not terribly concerned yet. We're obviously in that upper 2/3 of this compared to the impulse move over here now. So want to start watching that momentum more closely here, but really kind of keeping those larger king and queens here in play. So the question Alan asked is, you know, how do we know like that the king and queens are not ready for a 2T yet? It had a lot to do with like the momentum here. So when this was looking like a 2T intraday yesterday, it was right here. And if you look at this on a 20,000 tick chart, look at how fast that still is. So it only had one move up. It was still really fast up here. So it does get to a halfway point. It does have, you know, a lot of like measured impulse wave activity as far as things go with, you know, the same momentum. But corrections from that same momentum a lot of times tend to be a little bit slower, especially if it's the first wave up. So it kind of made it not as attractive for me. If this had been like more even spacing and then we get a 2T over here, that is going to be better timing for me as far as the time development goes for reversal patterns. So when we're looking at time development as this is extending, we can even go and add our time extensions here. And what's the first point that we would start having higher probability for stronger short setups? What's that first point, you guys? Yeah, 161.8. So as you can see, we aren't even there yet. So if it tries to pivot before that, the odds are higher that it could actually shift and go and bring in more strength. So watch that time development. And let me show you what it looks like on a time frame chart. So this is our tick chart. And this is our time frame chart. Probably easier to see on like a 60-minute, but I'll put it on here. So why is that? Why is it that if it pivots earlier, it just doesn't, I don't know what the psychological reason might be for it, but what I found is that what happens when it tries to pivot earlier, a lot of times what it does is it does something like where it forms like a shifted phoenix, like a tilted phoenix. So then when it ends up pulling back, it actually ends up giving us a buy setup that can pivot it and have a stronger break higher. So it's kind of curious how that forms, but that's the main thing that often traps people too on the short side. And then they'll say, oh, I shorted it here and it's just not getting going, but I'm going to give it a little bit more room. And then, oh, hey, it's not at the 200%. I'm going to give it a little bit more room. And then before they know it, it just kind of takes off. So if something is pivoting before the 161.8 and it's just getting off to like a really slow start, I need to see it go into like a shallow avalanche. That's going to be like the only saving grace, basically, is if it can do a shallow avalanche. And unfortunately, that's just not as common. So especially when you got like rounding off going on over here. So what would tend to happen more is that it would end up trying to break higher. So it's really tricky um, when that happens. Yeah, like gold. Gold did that. Let me see if I can find you guys the right chart for it. Mhm. Yeah, I mean, so what gold ended up doing was it wasn't that it took off like extreme on the upside, but it took a lot longer to go. So hold on, I'm going to grab you a chart of this. I want to show you this one on the 240 minute. I'll show you the micros here. This is a previous high here on the NASDAQ, so you've got a little bit of resistance here intraday, you guys. So on gold, what we had here was when we went between these lows, this pivot here was before the 161.8. And actually, let me add those on there so you can visualize this a little bit better. And this is exactly what I'm talking about, except that this one didn't like totally take off. It just did it intraday, but it was the same idea. So see this here? Here are our fibs. And look at where that pivots. And then it comes down, it gets to the 61.8. And then it comes up here and it goes way past that 200% before it turns around again. But look at how it popped back up here. So it gave like these fake pretending moves that it was going to break down. But look at how close that actually looks to what we're seeing on the daily time frame of the NASDAQ right now. So if this had had like a more of a move over here and then tried to pull down, then it's easier for that to break down. So thank you, Nicole, for the reminder. Nicole says you guys talked about it last night too. What do I think of moving my time frames over a pivot? I'm not quite sure what you mean there. You'll have to show me an example of what you're referring to there. Let me go back to, I'm going to kind of back up here. I want to show you guys the the momentum development on that NASDAQ yesterday though. So you can see that shift that helped bring in the selling too into the afternoon. So see this here? This is what things were trying to look like. And there's actually bigger there. Get rid of that. So we had this overall shifting happening as it was going into the afternoon. And this is the 2T that traders are starting to look at. And it did, go and do a two-way pullback here, but it only tapped the upper end So it didn't even get to where we would normally see like 2T patterns happening. It went and did the extra flush, then did the megaphone, and then we saw, some better downside back into that support level, but it couldn't go right away because of that momentum. So it had a much harder time getting going. And you can see that momentum here when you're looking at the time frame charts. Really strong. Strong upside compared to the overall downside. Now, what is going on here on this 30-minute, you guys, is that we had that rapid surge here, and then it's trying again here. But the problem with this is that this huge move here, it is really hard for the market to sustain that type of move. So the problem we're going to run into now is that this can more easily do that shift that I was talking about a couple of minutes ago. And that's going to be troublesome for the bulls because it's going to end up starting to try to trap more into more of them, I think. So if this had actually gotten off to a better start where maybe it did like a 1, 2, 3 up there, that's better for the bulls. If it had gone even a slower start and then went into a shallow phoenix, that would have been better for the bulls. Both of those scenarios would have been stronger for the bulls than what is happening now. So what's happening now is it made it up about, halfway, 2/3 of the way, probably 61.8 is my guess, but it couldn't get up to that 76.4%, which would have helped get stronger action coming in there. So this is kind of telling me that as we head into the weekend, we could even get a pullback here as we go into the afternoon. And then, maybe switching and shifting as we head into early next week. So still continue to be more cautious, you guys, on like swing trade setups right now. It's just not the best time. You're going to expect to get a lot more choppiness back and forth. Downside flushes, my guess, are going to have higher potential here as we head into next week again. But we're going to basically have a ton of back and forth speculation here. So use a lot more caution on that. Yeah, it's very true fighting between the Bulls and the Bears right now. Okay, I'm gonna pull up some other markets now. Yeah, that is why we're seeing all of the megaphones, Harvey. And that's going to continue to be a good pattern to play right now. You probably get a lot of phoenixes and avalanches on smaller intraday time frames. It's going to be harder to get bull flags and bear flags right now. All right, you guys have other things you want me to look at, let me know, and we'll start to look at some of the other markets here. My Tesla is still not updating. My chart got whacked. There we go. So Tesla, it's gonna get even more like this over the next coming weeks here. So with the narrowing range, a lot of times what happens is it's going to try to break one way and then it can pull back into it and just kind of chop around. and it'll have a really hard time usually getting a strong directional bias going again for a while. So it's something that I would totally stay away from at this point, unless you are just day trading it, and then look at what's happening on day trades. It's crazy. Way too many tails. This is telling you that people are getting flushed. You want to back up to probably at least a 5-minute time frame to look for patterns on Tesla right now. See a good kind of shift there. Phoenix here, but it's struggling to get going out of that Phoenix, kind of like what's happening with the overall market. So Tesla is at risk of another flush here as we head into early next week too. Target. Target is at a widening up zone, so it already hit that bigger measured move here. So things like I wouldn't go for a 2T quite in here or a double top because this starts out slower, then it kind of pops. So I think that, even as this pulls back, you're probably going to end up with slower, choppier corrections on target, not a really strong flush type of move. It's probably going to be more like how this went up is going to be more like how that will fall down. So I would still hold with this trend and just expect that choppier action on a correction to start with at least. FSLY. This is something that usually I would expect a longer base into. There'll be a good probability that we could get some false upside breaks, but not really breaking the channel, and then just kind of holding in that channel range a lot longer. You look at the weekly on this. So our weekly, what that does is it puts into perspective the momentum a little bit better. And so this has gone further than what you would see if it was going to do like a 1, 2, 3 type of move. So it could easily go and play out a lot longer as we head into even next year at this point. This momentum is just so strong here. But then it shifted with the higher highs. So, false breaks to the upside, breaks to the downside. But overall, I think it's going to be harder to get a really strong trend in here to keep going. Let's look at intraday. See if we have any setups. That double top on the overall market held, you guys, intraday. I'll show you that here in just a second. The NASDAQ resistance we were just looking at. Yeah, so this pop here could have done a 1, 2, 3, except that it pulled back too hard and too fast here. So that's going to make that choppier. Might still get like a 2-wave like this that can pop it again at some point in a week or so. But I don't really see anything right here that would interest me. And notice where this pulls back on the channel. It hasn't come into that channel there. So that tells me bulls are still in control even though we're getting a correction. And if that time development's the same, it might not ever hit that channel, which would actually be better for the bulls as a swing trade. For it to not touch that lower channel because it popped here. The first base is low range. So if we look at this entire pullback, you got your first base down here. The second base would still be under that 50%. So if it can do it without showing any real weakness over there, and this could even go, you know, and pop up in here and base up here, then that could bring in another upside move here on the daily time frame. But on that weekly time frame, it's going to be really hard to keep going on a bigger trend right now. So this would be the most probable setup that I would watch for to try to form. So we would want to see some sort of shift here as we go into next week where it just kind of chops around. And volume, you want volume to be dropping in that point too. Ideally, it would have dropped over here too. So let me look at that. Oh, good, it did. So that is really good over here. See that? Even with that gap down day right there, the volume is really light. Even these days here, like here, where it dropped down, the volume is really light. So as long as this volume can hold light, that kind of tilted Phoenix action is what I would look for. The Kiwi. And what else do you want me to look at, you guys? I'll load some other charts here while we're waiting. And I'll show you that NASDAQ. Here's the double top we were just talking about right there. And actually, you guys see what happens right here? See how that has that really strong pop there and then it kind of shifts? That's really good for getting that pullback too. So that helps confirm the pullback that we just saw. And we're kind of in a zone now where the 10-second chart looks a lot like the daily time frame in the overall market. See it there. And then 240 is a little bit better. So if you look at the like the 1 minute, see how this kind of shifts in here? Got that same shifting right here. I went and tried to type in the micro gold there as a setup. So micro gold is trying to do a double bottom type of action too. I tried this a couple times over the last couple days. It hit main resistance yesterday, and then shifted and flipped, which if we look at the 15-minute on gold, I'm actually going to pull that up. That looks really close to what we were seeing happening on the NASDAQ too, on the intraday time frame charts. So see how that shifts there? That's what I'm looking at as a problem that can happen with the NASDAQ too. I'm gonna grab a drink here. Hold on a second, you guys. JE, oh my gosh. JE is a good example of something that ends up dying. So what kind of happened down here is you can get like little short-term bounces, but this is done for. I don't know what this is, but it's energy is not looking so good there. So these will often have pops and then just kind of trail on off again. Oh, we can totally expect some short-term jumps, but then they just trail on off and end up lower than they were. Used to be like $500. That's crazy, you guys. These end up being like the fun zone for penny stock players. They are prime for pump and dumpers. You'll still see the patterns in there. I mean, look at this in there. It's a little avalanche. Your trap gap right at the previous highs, which we were talking about like the last couple of days. See how that gapped and then kind of pushed up? It's exactly like what we were talking about on gapper stocks. But yeah. So our Kiwi, the Euro one, see how that pulled and went pretty fast, like a 1, 2, 3 up? This is what I was talking about earlier with the overall market where that can go and turn around. So if you look at like pivots, these are happening way before the 161.8. So this is actually holding up pretty well in here. I could even see this, offering up like another move up in here, and then it might risk going into a megaphone. So it could go do like a 2T or something up here at this point on this 240 tick chart or 240-minute chart. Let's go look at the daily. Yeah, so the daily here's one where, it kind of is like at a zone where, hey, it did the JE type of pop here. And except JE, translate that sound to like the intraday charts. And then it just kind of like climbs up, can't quite go into a phoenix, falls down really fast. So then traders might be thinking, oh, hey, avalanche, which could have done like a momentum reversal plus type of move, except that it popped too fast off this double bottom, which is what that would have been best case scenario for my long in the overall market was if that had done that, if it had done that faster bounce. And obviously that's not what we're seeing in the overall market. So this is exactly what it would have looked like had we gotten that faster move going on the overall market. Now, at this point though, it's in midway land. If this shifts more and goes out a little bit further and shifts, it could still do a mega land, but the chances are becoming higher that a correction would help bring in more buying again. So it's all going to depend upon what that shift is that takes place over the next couple weeks. And in the meantime, it's probably going to be chopping around a lot more. So the next couple of weeks here, at least week and a half, probably going to be pretty choppy. I should plan for next week on the NQ. How would my approach be? Check a weekly, daily, 240-minute to give me expectations? Yeah, I mean, that's at this point, though, those time frames aren't going to matter as much to me because I already know where we're at on the 240 and we're at a back and forth chop zone. So at this point, what I'm focusing on is going to be 240-minute and less because I want to look at what's happening on the intraday action and where those momentum shifts are taking place now. So that's going to be my driver at this point as we go into next week. Not so much where the daily charts are because those daily charts are at support, but they still have wiggle room to the downside. And so there's nothing really giving me a big pattern at that level. There's not enough of a shift to really drive like a bigger setup one way or the other on those time frames yet. So definitely focusing just on intraday charts. 60-minute would be a good time frame, yeah. But really even like a 5-minute or um, like the 6,000 tick. Those would be really good ones to watch for intraday. LEN, this is also at that chop zone, you guys. We call this a zone of pain. So it can easily, go back and forth in here for a while. It could even go and do like a 2T there on the daily time frame. But you're probably going to get chopped up. It will have a couple of intraday moves that'll kind of, flush it one way or the other. But sustaining it for a bigger trend on the daily time frame, not so easy yet. Because even though we're getting this kind of a little bit of a shift in the momentum up here, the overall momentum is still pretty strong. I mean, it's average, maybe a little bit above average. Notice that there's a ton of overlap with spikes. That's indicative of a rather average momentum move. So when you get corrections to average momentum moves, if it was like a really strong drop here, an average momentum move up could bring in a stronger move to the downside. But we could also see shifting like that. So there's nothing to really say which way an average momentum move is going to absolutely break. It can go into a range. The more it shifts at that high, the easier it is for stronger selling to come back in. So like if this were to say go and give us a flush in here and came back into like this zone and then pulled back up with like a slower move up there to a higher high, something like that would give me a better potential for a short that could be more sustainable on a bigger time frame. So if we look at this on the weekly time frame, you're probably going to see nothing of interest. Yeah, I mean, look at that. See how strong that is? It looks like what we saw on the NASDAQ intraday yesterday, where some traders were starting to look for 2T patterns. But you might get a smaller 2T and then it goes and does another move to shift it again. So the way that, this could try to bring in stronger selling again before that would be if it kind of chops around here, then kind of chops up, and then goes into more of like a shallow avalanche. But right now, I don't really see that happening. Even if it flushed hard here, it would have to go back, a third before it would negate the bullish side. And even then, it could still shift like that and come back up again. So not too excited on this right here. I think more shifting at the highs would be better to try to get, any more downside going on, like a megaphone here. So if it could do, this is just too strong to give me a megaphone on the weekly at this point. I think we're going to see a lot more securities doing the same thing, where they're just kind of entering a zone of, I don't really know what to do right now. You know, we had such strength throughout the year, really, really amazing coming from that comeback. And it's kind of pushing things up where now we're going to be going into the elections and all of the end of year uncertainty that surrounds that. And it's just going to be really difficult to get anything going for a really strong trend now. Everything is kind of at parabolic levels. NCR at this point had that big shift here. This is one of those where it could shift and pop, but it needs a little while to play it out. And it has touched that lower channel, so that's going to be kind of harder. Ideally, what we would see for this to go and pull stronger is that this high here would be lower than this high here. So it would pull back here, it pop up, it would go into like another range down here, and then that would bring that back up. So this again is kind of like what we were seeing earlier, where that would be the best scenario. It does look a lot like gold on some of the intraday timeframes on gold. Which previous year do I see most like this one on the chart? Not sure what you mean, Peggy. Which, can you put that into context a little more? Sorry guys, I am also fighting a migraine here, so gotta think here. Which one you're looking at a little better? The S&P or the NASDAQ? What year is like what we're seeing right now? I don't know off the top of my head. I mean, I think 2000 is a pretty good one to go back, but a lot of you guys aren't going to have charts that are going to go back that far. But that's really like one of the times where we had a massive parabolic move. You're going to be better off looking at individual securities that were kind of hyped up on shorter time frame things. You know, look at things that like moved on news over a couple of day period and how they corrected, and then compare those to the bigger time frames of the overall market. So you'll find a lot more examples doing it that way, like looking at things, you know, like that went and popped up like that. So again, NCR, you know, that it would have been ideal if it had kind of pulled up here and based and then tried to go. So it might still, you know, do something to shift like there. We're at a good little shorter term support level here, but I would just use some more caution. I would be more inclined to buy it though than I would sell it. Let's see. Look at a couple more here. Because of the two waves down. Yeah, you've got two waves down here, and it didn't go with a 1, 2, 3. So when this dropped here, it kind of did a shallow avalanche, but it only did one move, and then it's just basing out too long. So if this was going to do like a bigger 1, 2, 3, I would have expected it to have gone faster. So I think that what's happening is that it's trapping, and so that can pop up again on intraday charts a little bit more easily. we don't have a buy set up yet. You know, this would have been, you know, a possibility here with like a 2B. But see how it had a really sharp drop, but then it bounced back so far. So it didn't do like a more rapid 1, 2, 3 like you would get in a lot of shallow avalanches. So I think that's going to allow, you know, the possibility for it to come back up into here more easily. We probably got fan support there too. Go and add a Fibonacci fan from there to there and look at your support levels, see what you got going on there. And then let's look at SQ here. And we'll wrap it up. So SQ is one where it has, again, really pop moves. So if this tries to base here and tries to go and break, it has a better chance it's going to come back into that range again. So it could be an early break and then try again. I wouldn't do much with this right now. I think that if you try to go long on this, it could easily go and do a trap. So it would not be something I'd want to hold for more than a couple days. And you would really want to use advanced trade management because it could easily just do a creeper move and then flush. So the risk of a really rapid downside flush on SQ here at some point, probably late next week, is looking pretty high based upon what I'm seeing right now. See the extreme move here, big pullback. So, you know, this tries to break. Odds are better you're going to get a shallower break that can flush. So you might get like in here, like a little kind of phoenixy tilted phoenix type of move in there, but sustaining it is where I would be really concerned. And it just does not trade well intraday. It has so many tails that it's just so easy to get flushed out. I would probably want to go to maybe like a 10-minute chart on intraday timeframes if you're going to use intraday charts. Let's see what tick charts look best on that one. Probably an 800 tick, what I would use. And then one last one, I'll pull up INTC for you guys. I'm one of those weird traders, you guys. I've got some questions on the VIX. I don't use the VIX anymore. It's been well over a decade since I had it on my charts. In fact, it's probably been close to 2 decades since I've had it on my charts. I know a lot of people swear by it though, and I'm not gonna like rule it out as something to follow, but it is not something that I'm in tune enough with to give you guys a good opinion on it. So I'm not even gonna bother to try. How many of you do use it? Curious. Again, I'm not saying it's a bad thing, not saying it's a good thing. I just haven't used it and basically had too much going on my charts where it just got to be distracting. So when I went and just kind of got rid of everything that was on my charts, it was just one of the things that went off, and I don't have any, you know, strong opinion one way or the other. I mean, some of you guys love it. Like Addie says, I love the VIX. and Crohn's is like, it's a good indicator for market direction. So it is one of those things. It's like Fibonacci, you guys. It's one of those extra things that can help you out, but you need to use things like it well enough that you know when it works the best and you know when to ignore it. And any indicator is going to be like that for the most part. So there's not really anything wrong with indicators. The thing with indicators is that traders usually overdo them. They put way too many on their charts. They get distracted focusing on the indicators. If the indicators aren't giving them a strong setup, they might totally miss something that looks great on every other thing. But the main thing is like treating it like it is like the do or die thing. It's like with volume, like if volume is dropping in a trading range, that's awesome for me for a Phoenix or for a bull flag or like a check mark breakout. But if it's not dropping, it could be just neutral. It's just neutral. And like Addie says here, folks trying to shorten it up, trying to fix this drifting lower, really helpful reminder for me just to avoid shorts. So it can be a great thing like that, but play around with it and get comfortable with it. Um, you know, especially like doing like sim trades and stuff like that. And then once you reach that comfort level, then you can start to rely on it more. A lot of things with indicators, or some indicators are going to work best when the market is trending. And as long as you know how to read market trends, like where you're at in that market trend, it's good. But then what happens is that when the market trends get to be the ends of those trends, then your indicators might still give you, like, for example, buy signals, whereas it's not really a good buy signal anymore. So like, for example, like a 20 period moving average, if you're buying pullbacks in an uptrend, your 20 period moving average might hold perfectly for the first several pullbacks, and then it just won't work. So it's a good example like that. INTC, hmm, I wouldn't even be surprised if INTC tries to bounce a little. It's had such an extreme drop. I think that there's just so much indecision on this right now that when it tries to do an intraday move, you're going to get like a pop one way or the other. Pop up is going to be easier than the downside right now, but I don't love it. You guys, it's like, the reason I say a pop up is easier is because it got so extended here on the downside that, maybe like a double bottom or like not even a double bottom could pop this back up into there. These are tricky because, depending on just even the smaller shift here, you could even get things, that drop down, but I'm not seeing that right now. So I would personally stay away from Intel. Intraday, you've got a little bit of 2B type of action. Look where it's coming out of that 2B though. Look at this. So what's happening here is it popped, but it only made it to here. There's just not enough shift yet. So if it could shift more like this, maybe like a buy like that would be good for an intraday setup. But here it just looks like it wants to chop. I know. I kind of stay away from that. It looks kind of yucky. When we get 2Bs, you guys, what we want to see is you want to see really holding a good trend to break above that previous channel zone. So when it gets to this level, you would like to see maybe a kneecap at the max. Otherwise, you just kind of want it to keep creeping up and going up. And that way, corrections are going to have a better chance of even continuing. You'll probably see even small corrections, not bigger corrections, but smaller corrections and continuing. That's what happens when a 2B goes like it should go. This is really steep here. It's part of a little bit of a momentum reversal too, but it didn't have much downside here. So it's easier for it to then come back and do something like that. All right, you guys. So thank you for joining me here today. I am going to head on out. I love all the participation and you guys, really good feedback in here. And yeah, if you're curious about the VIX, check it out. It looks like Addie and Karan are two of them that use it. So, they might be willing to answer questions as to how they use it. But just be cautious when you're adding a new indicator, You want to not over rely on them until you are really, really comfortable with them. All right, guys, take care and have a great weekend. I have a Phoenix class again tomorrow, so I'll be having all new examples. So even if you've attended classes in the past, be sure to check out your email so that you can join me and kind of help cement that knowledge and get to see a lot of other additional examples, especially new examples in the current market, and entrench that knowledge even more. I think I'm on at like 3 something in the afternoon Eastern. Have to double check the email for sure, but you've got that in your inbox. So if you have any questions, let me know. I will repost it into our Telegram channel as well so that you guys can check it out there. And I'll try to get a recording of it too so that we can post that into the bonus section. All right, you guys, thank you for joining me here, and I will see you all tomorrow.